filled.
All right. Good morning, everybody. Good morning. Good morning. Okay. I'm gonna try for this. I'm gonna. Mm, 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 mm. Yeah. What's up, Katie? Yeah. And we're doing a lot of new stuff over here. A lot of new stuff. Yeah, boy can get in. It's crazy that like that, but that's honestly, I feel like that's crazy within itself. All right. I wish I got into this move. I was actually thinking about getting in here at 22 last night, but I wanted to wait to see what the reaction would be to the news. If I left my limit here and with a 10-point stop, I would have been in this trade. Goes to show, trade your plan, regardless of what happens. Trade your plan. But I mean, it makes sense that it tapped into this area of liquidity. I mean, it makes sense. But let's look at the NQ though. Let's look at the NQ. Because I know the NQ had a bigger reaction. Well, I mean, it's the same, but obviously it was a little bit bigger. And we got Pumpy Powell coming in at 9 o'clock in the next 30 minutes. He's speaking to a Dutch bank, somebody. I mean, this is just going to be another one of those meetings like he had with the Canadian. Forgot what he was, but it's going to be one of those. But the market is still going to react to whatever the hell he says. So. That's interesting. Okay, so whenever this meeting starts, we'll set the charts up in this side by side, and we'll move from there. But this actually may be going to retest that 58 level. So I wouldn't. I'm not gonna lie, this is looking like a good short right here. This is looking like a good short. However, this would probably be a good scalp, probably, but honestly, this is a dangerous scalp. You got the EMAs in your way. And when price is in a supply area, you got the EMAs in the way. You kind of have to wait until the EMAs kind of get out of the way. Or else every time when the price drops, you know, people's going to be waiting at one of these EMAs to buy it right back up. So we're just going to have to be patient with this. Like I said, I wish I got in at this move. I should have just left my limit at 22. I should have just left it there. Yeah, I'm bullish as well. Or I'm not bearish or bullish. I'm a chartist. I'm just going to trade whatever direction the chart is saying that will have the best risk reward. Like I said, I mean, this is actually looking like a good short, but man, Man. Hmm. This is looking like a good short opportunity, but it's too much bullish momentum. We had this bullish push off the lows, and this was just basically price tapping into this area of liquidity. And that's on the ES. On the NQ, it's the same thing on the NQ. Honestly, I might just actually just take this off on the NQ because it seems like it's not. No, we'll just leave it on, man. It's not a big deal. Yeah, I'm probably just do that. You can see that price tapped into this area of liquidity right here. We got that bounce as soon as it tapped right into it. So this is this is definitely bullish. This is definitely bullish because we got the bulls coming in here. And this might be an area where the bulls come right back in. Let's just say that the bears do try to drop this down. The bears will probably come right back in this area or possibly this area right here in this range between 33 and 27, which is not bad risk reward. You try to get into price as low as possible, and you can put your stop underneath this candle, and it'll still be within that 27-point range that usually I trade the NQ with. Just 27 points of risk on 2 contracts. But I think the market is going to be, well, I mean, I guess I can't ignore that because we just had to break a structure right here. But like I said, I don't think the market is going to be. We'll see. We'll see what happens, man. We'll see. Instead of just thinking about it, just trade the charts. If I'm not mistaken, the job or PPI came in better than expected. Huh. So that came in better than expected. Good morning, Jonathan. So core PPI, and that's what people usually likes to look at, the core PPI year over year, month over month. And the numbers are good. The numbers are good. So I don't know if this is a good news, bad news situation or a bad news, good news. Who the hell knows? Who wants to keep up with that? Right now, PPI came out better than what was expected. Now, we'll see how the market reacts to that. When Powell gets on the stage, we'll see. But boy, was this a beautiful move down. Beautiful move down. All right, let's get into the journal. Let's get into the journal. Set one up for today. Okay, so overnight recap, price traded in a tight range. So the data, the inflation data. Yes, PPI was released at 7:30 Central Time. And the numbers I do want to put in here that somewhere, so which side of the market you plan on trading on? So in the pre-market or at market close. Okay. So for right now, the market is bullish. It's trading higher. After we got to tap into that area of liquidity, price is trading to the upside. We have Powell in the next 18 minutes, so we'll see. We'll see how the market reacts to Powell. I highly doubt that he's going to come out and not say the same shit that he says all the time. I would be surprised if he does. The market would be surprised, and we would definitely get a reaction to whatever he says outside the norm. But the markets will be listening to what he says, so there will be a lot of volatility. Actually, I think I have a 50K. Yeah, I got a 50K account. So I'm going to be gambling in my 50K account. And the reason why I'm a gamble in this 50K account is because I don't ever plan on keeping or activating a 50K ever. This is one of those combines that I have for $5, and I'm just going to always use this to gamble. I'll just spend the $5 always. It's not a big deal. So I'm going to use this account to gamble Powell. And if you have an account like that, I wouldn't risk an account that you've worked hard to grow. I wouldn't gamble on Powell with an account that I had to plan my trades, trade my plan, accept loss, break even, all the trades that you were disciplined in. I don't ever want to give that up. And I would hope that you wouldn't either. So I will be gambling in a 50K account. But there is a big wall of resistance here, which honestly, I mean, it makes sense. I mean, you got this big wall right here of resistance. And right now, the bears are holding the bulls off. I don't believe that's going to be. I don't think that's going to last. I do believe that the bulls will trade above this high. We'll see what happens when price gets closer to that 60 level. But honestly, if it gets that close to these highs at 64, I mean, there's really nothing stopping it from using the stops that are resting above these highs to push price higher. And this line here represents the last high. And what I found out last night, ironically, this high was the CPI high. So our last CPI, this is as high as it got before we dropped off of CPI. So when they say that history repeats itself, it'll be kind of funny if price finds its way up here in CPI and we get another drop. So we'll see what happens on that. And the same could be said for the NQ. The NQ will definitely take this high out. That's basically nothing for the NQ. She takes out her highs. And this is the high right here. This is ES. My bad. I don't know why it switched over. Okay. All right. So for the NQ traders, so right now, I'm looking at price has just left an area of balance. Obviously, we got to break below this. We got to break below this right here. Actually, let me do something real quick. Where's that at? So we got to break below this low. And more or less. So let's see. So 842. We got some previous structure at 842. I don't know. Yeah, we can definitely touch that. We definitely touch that. All right, so we're getting a retest of this high right here. Honestly, so we got this big drop. The bulls came right back in. They dropped it. The bulls and the bears had this battle. We finally get this break of the structure off the news, but I mean, it's no surprise to nobody. We got to tap into this area of demand. And since then, price has traded to the upside. We have Powell. Time is moving by slow today. What's up with time today? Because I could have sworn that we have Powell in the next 18 minutes, and hey, that means only like 5 minutes just went by. That's interesting. Yeah, right now, I wouldn't short this. I wouldn't short this right here. Or, I mean, obviously, if you're in a short scalp, I mean, you can trade your account how you want to trade it. I feel that just be mindful here. Just be mindful. Just be mindful. Just be mindful. Because they can come back in and they can definitely come back in at the 300 level. Definitely come back in that 300 level to try to push this higher. Mm. Buying short-term puts. I knew that was I knew that was a mistake. Let's see if these bulls are going to defend this 300 level. Oh, actually, I forgot about that. Let's look at that. All right, so on the Nasdaq, it seems that yeah, it's about 50-50 on both sides. About 50-50 on both sides. Hmm. Mhm. Yeah, I kind of figured that they was coming and do that. Yeah, I wouldn't try to short the market today. Well, at least for right now. I will wait until we get that confirmation because we've already got that dip lower. And so now I believe the market is now on its rotation higher. There's no money to the downside right now. All the money is to the upside now. So it wouldn't be unheard of for the market to try to trade until about 373-ish. Probably we'll probably see a rejection there first. We get a sweep above this high. Yeah, let's see what they do here at 62. Yeah, let's see what they do when they get to like 52 or something. 52, 55. Like basically somewhere in this range. Above this high. I want to see how they react here. But for right now, the bears do seem like they're trying to hold this level off. But I wouldn't trust it. I wouldn't trust shorting this, not right now. Not with the PPI being good. And Powell speaking in the next 7 minutes. Let's see if they actually got it set up. Let's see if they got it set up. Actually, shoot, why not? Hmm. There we go. That's the curse of, well, it's not a curse, but that's what happens when you have multiple monitors. Okay.
Open banking and API integration. So not just telco, but banks are now carriers because we open up our infrastructure for third-party services and also supporting functions outside our own domains. Also the need finally there to collaborate with fintech and newcos, because it was always about incumbents are relevant. Fintech and newcos are small, not relevant. Why should we? But yes, with open banking and open API, there are so many use cases and new business models. RPA, so robotic and process automation, it's not just now in a pocket, it's a whole chain that we can automate, offering us and allowing us to utilize OPEX reduction, scalability, freeing up means and headcount, and also the financial inclusion. More and more you can see that our sector is becoming mindful of unserved regions, unserved persons, and unserved clients that maybe are not banked or underbanked, or are not in the access of these over-the-top nice services. It also allows us, financial inclusions, to finally have a reason to connect with NGOs and with social institutions, giving us insights and understanding these potential social means for us. Doing good can actually help us perform well. And last but not least, by utilizing technology, we are in far advanced stage of tracking our ESG initiatives, whether it's green banking or it is our bonds and funds. Really nice. Connected, all these shared innovations really deviates our minds and our focus from internal focus towards a customer focus. But let me remind you, we were already really busy. You are already busy taking care of the going concern activities, taking care of changing the going concern activities, doing the business that's already there in place, and also changing this business. Now what? It's a lot, and it's ever so changing and evolving and asking more of us. It's more and more important for us to seek a level of adaptation and real leadership. How are we going to go about it? What you really long for is that everything that's in the going concern and status quo gets leaner. But how does it become leaner? What does it ask of us? Because then we could free up the means and the budget and the time, and the focus. You can also attend your focus only one time to leveraging it towards changing the business and responding to the changed demands in the organization. This is a model of Venkatraman. He's a Harvard professor. I remember my first job in the financial services industry was with Delta Lloyd Bank or Delta Lloyd Bank. And I remember this model was already there. And what I like about this model is that it's still so relevant. I love that if these type of frameworks and models can really overarch time. Let me give you the short version. So while business and emerging technologies, customer demands, regulatory compliance keep on changing, we change our business strategy. And business strategy leads to changing of IT strategy. But in my humble opinion, we keep forgetting to change the structure of your organization and change the structure of your teams and the way you collaborate and create. And also we keep on getting away with leaving the clutter behind and changing the IT architecture and the IT processes. So if you want to win at strategy, structure follows strategy almost immediately. Ask us to lead. And I'm not talking about the leaders in the audience, but it asks a different behavior. So lean should be ingrained in your
Oh my God, dude.
attributes and your behavior,
No, what is she
enable
talking
business
about,
growth,
dude?
agility, and I'm
What is she
not
talking
speaking
about?
about agile, drive cost effectiveness, because that drive of cost effectiveness, not in rainy days, but already in sunny days, can be spent towards our own business. It's not about the leaders, it's not about you, it's about sharing leadership and sharing mandate. It's about giving that autonomy away by not having it and multiplying yourself as a change agent in your organization. If you see the same things, obviously nothing will change. People will still follow you and not speak up or speak out. We really need the benefits of diversity and inclusion. I am confident that every one of you already knows the real tangible benefits of surrounding yourself with people, different mindsets and different expertise. The overarching across markets and global scale strategic intention of customer obsession, sustainable growth and radical simplification is not just for banking. It is actually for all countries, across sector, across cultures, and is something we need to work on with more attention. We could learn of the nice innovations in the other sector and reach out to them, and maybe someday they will be sitting here at the FPA sharing their stories that we can learn from. Okie doke, what does that mean for us? Donut or do not worry, we just need more color. We need more the outliers and the different mindsets and different expertise and people outside sector joining us. It's, in conclusion, not about technology. It's not about legacy and tackling legacy. It's about tackling the legacy in people's minds. Open mindset starts with you and I, and that's what we're going to do today. So I wish you all a great Connecting the Dots day.
Thanks very much, Arten. Super. Very much appreciated. Thanks for your appeal for cooperation and change, but also the thought-provoking things.
Very welcome. Thank you.
Thanks for that. Very good. Then on to the next.
I don't know what the hell she was talking about, man.
Let me provide you with a short background of the speakers we will have on stage now. Starting with Jerome Powell, an attorney and investment banker by background. Mr. Powell is the 16th chair of the Federal Reserve. He became a member of the Fed's Board of Governors already in 2012, and Mr. Powell was nominated by President Trump and appointed Fed chair in 2018. In 2022, Powell was nominated as Fed chair by President Joe Biden and reappointed for a second four-year term. Over the years, Mr. Powell has gained a reputation of consensus builder and problem solver. On Klaas Knot then. Mr. Knot has been president of the Dutch Central Bank since 2011. In that capacity, he is also a member of the Governing Council of the European Central Bank. And in addition, since 2021, Mr. Knot has been the chair of the Financial Stability Board, the international body that monitors and makes recommendations about the international financial system. Also, he's a professor for monetary stability at the University of Amsterdam. Claire Jones will be moderating today's interview. Mrs. Jones joined the Financial Times in 2011, initially covering the UK and the Eurozone, living in Frankfurt. And today, she is the US economics editor. She's been covering growth and the rates environment intensely. And she's also calling herself a bit of a geek in keeping track of what central bankers do. I'm super happy. Please welcome on stage Claire, Mr. Powell and Klaas Knot. Hey Claire, I'm leaving it to you. Thanks very much.
Yeah. Are you in the middle? No. Okay.
Hello there. It's a pleasure to be here today in this wonderful venue. My name's Claire Jones. I'm the acting US economics editor of the Financial Times, and I'm here today with President Knut and Chair Jay Powell. Chair Powell,
baby.
I'd like to begin with you.
Pump it,
Could you give us
Powell.
a brief summary of the US economy and where Fed policy is right now?
Thank you, Claire. I'd be delighted to. Let me say it's great to be here. Thank you for being here. And Klaus, thank you for this great visit I've had here to Amsterdam. It's a pleasure and an honor to be here. So the U.S. economy has been performing very well lately. We had growth last year of just over 3%, quite a strong year. And it's driven by a number of things. I would point to a very strong labor market where you've got rising employment, you've got rising wages, so disposable income, consumers are spending. Generally, households are in good shape financially, they're not over-levered. And so we see a good picture. Consumer spending has held up very well. As well, business investment has been strong. Businesses are seeing opportunities to invest, and that has helped. I would also point to a fairly large influx of immigration into the country over the past couple of years. Those people are joining the labor force. We're experiencing still a labor shortage in many industries, and so there are jobs, and they're going to work and they're consuming, so that's also boosting growth. So overall, a good picture looking at the data so far. The labor market is very, very strong. It was, I think, overheated a couple of years back. And what we've seen is it coming back in gradually into a better balance over the last couple of years. And now I think if you look at a broad range of data, you could say that the labor market is about as tight as it was before the pandemic in 2019. And that's good. Real wages are now positive. And unemployment has been below 4% for 27 consecutive months, something that hasn't happened in a half century. So, labor market very strong, and
no, they don't.
Signs of gradual cooling and rebalancing. So
trade the charts.
Supply and demand of workers is coming back into
these guys are so far removed from reality,
just as we would want. Inflation. It's worth starting with the fact that. On a 12-month basis, headline inflation.
They see reality through numbers, through data, through sheets.
7%. Core inflation.
That's how they see reality.
5.6% and is now at 2.8%, so it's down by half. That progress, though, really happened over the course of last year, particularly the second half of last year. The first quarter in the United States was notable for its lack of further progress on inflation. We had higher readings in the first quarter, and higher than we expected. We did not expect this to be a smooth road, but these were higher than I think anybody expected. And so what that has told us is that we'll need to be patient and let restrictive policy do its work. If I turn to the outlook just for a second, I would say we expect continued growth, 2% or better. We expect the labor market to continue to be strong, but to move further and further into balance. And I expect that inflation will move back down on a monthly level, on a monthly basis, to levels that were more like the lower readings we were having last year. I would say my confidence in that is not as high as it was, having seen these readings in the first 3 months of the year. So we're just going to have to see where the inflation data fall out. And I'll stop there with the economy. Thanks.
Thanks very much. We'll be digging into some of that later in the discussion, but now I'd like to turn to President Knut. Could you maybe give us a little bit of a sense of how you judge the state of play in the Eurozone and here in the Netherlands?
Yeah, I think the state of play in the Eurozone is not entirely comparable to that of the US. We just came out of more than a full year of economic stagnation. Now, luckily, the signs of recovery are clearly there. We started off the new year much stronger than we had expected. And if you look at the soft indicators, that recovery is expected to continue into the second quarter, and it's even expected to accelerate in the second half of the year. And this is mainly on the back of ongoing recovery in real wages, ongoing recovery in purchasing power, and strong consumer demand. Now, there are two ways in which you can look at this recovery. Of course, you can say, on the one hand, the economy has proven to be resilient. We've went through quite a number of shocks. monetary tightening, unprecedented, and yet we did not really go into a recession. The sacrifice ratio of the disinflation process that we had to go through was virtually zero. Unemployment did not budge. So resilience was there. But on the other hand, the growth was clearly not as abundant as it was in the US. And that is clearly remarkable. Now, I think there is a multiplicity of factors behind this growth differential. But if you allow me to single out the two most important factors in my view, first of all, fiscal policy. And this was not only about the size of the fiscal stimulus, it was also about the design of the fiscal stimulus during the pandemic. In the US, there was a choice for temporary layoffs, income support, and then rehiring when the economy reopened again. Well, that means that a lot of labor reallocation took place, and we know that such reallocation is very productivity enhancing. But in Europe, we chose a different approach. We chose an approach that was focused on job security. The governments essentially took over the wage bills of the firms. And as a consequence, we froze the supply side of our economy for a couple of years. Then during this period of stagnation, there was a lot of labor hoarding, which means that we have gone through a number of years where there has been hardly any labor or, for that matter, capital reallocation. So we have not enjoyed these efficiency benefits of reallocation as much as the US. And secondly, the economic impact, the negative economic impact of Russia's unjustifiable invasion into Ukraine were, of course, also much stronger on this side of the Atlantic than in the US. We are a fossil fuel importing area. So it meant that this was a very strong negative terms of trade shock, and this terms of trade shock of which we are recovering still also today. Now, on
It's interesting. We just got done talking about that
I'm
just
increasingly
yesterday.
confident
We
that
just talked about
inflation
that.
will decline towards our 2% target during the remainder of the year. This is mainly on the back of goods and food price inflation that is coming down. Services inflation has been resilient for a while, but we're now also seeing the first signs of improvement there. And that has everything to do with a slow but gradual moderation of wage growth, which is quite essential, I think, also going forward in making an assessment of inflation risks. But all these developments clearly point toward further disinflation. Also here, an intriguing question is, of course, is there more similarity or are there more dissimilarities with the development in the US? From the onset of the inflation shock, it was clear that the balance of root causes between, let's say, positive demand shocks and negative supply shocks was different in Europe from the US. The US had a much stronger demand component. I think we had a much stronger supply component. Yet at the same time, there was a remarkable synchronicity if you look at the development of actual inflation. So the bump that you've been seeing in the US, the question for us now is, are we going to see such a bumpy development as well? So far, we've not seen any evidence of it, but that's clearly a warning signal for us. Also not to
morning,
come
Alfred.
with any sort of premature declarations of victory. All in all, I do believe that inflation is probably less persistent in the euro area than in the US. And that leads me then to conclude that if we manage to continue on this track, if the incoming data continues to validate this development, that it will be appropriate for us to gradually take our foot off the brake, to remove some of the restriction, the monetary policy restriction that we're currently imposing on the economy. The data that needs to confirm this, a lot of that will be available at our June meeting. We will have an additional data point on the labor market coming out next week, the triangulation between wage growth, productivity growth, and profit margins, which is important. Then we will have new projections. And I'm confident, again, that if they confirm the picture, as I just sketched it, that June will be a good opportunity to make a first move in removing restriction.
Okay, very clear hint at June there. We'll come back to whether we could see further moves in July too. But just to draw on some of your comments there, you seem broadly confident that inflation is going to prove less of a problem in the Eurozone than it seems to be at the US at present. We've seen quite a reasonably high PPI reading today from the US, Chair Powell. Some people have said that looks
They're gonna
hot.
probably drop it. Gonna drop
What do you
it.
think of today's reading? And more broadly, is there a risk that inflation becomes a lot more of a problem in the US than it is elsewhere?
So we had a producer price index reading just a couple of hours ago, and I would say it's actually quite mixed. The headline numbers were higher, but there were backward revisions, and we're of course disassembling it, taking it apart, and looking at it. And I think markets and analysts are looking at it as I wouldn't call it hot. I would call it sort of mixed. But in terms of the overall picture for inflation, I think you have to go back to last year, where we had historically fast disinflation. Inflation came down by two full percentage points last year. Why did that happen? It's really two forces working together. One of them is just the reversal, the unwinding of the pandemic-related supply and demand
what's up,
shocks.
B4L?
So that we thought we would always get that. We thought we'd get it in 2022, and we didn't, and then it really arrived in 2021. So that was a big part of this, was just the reversal of distortions really to both supply and demand. The second thing is just restrictive monetary policy, and restrictive monetary policy cools the economy and makes room for the supply side to heal, but also lowers demand and ultimately lowers inflation. So I do think those two have been working together. And the question you ask is inflation going to be more persistent going forward? I think, and that would essentially mean that we've gotten the supply side gains that we're going to get, and now it's down to lower demand, which would take longer and potentially be more painful. I don't think we know that yet. I think we need more than a quarter's worth of data to really make a judgment on that. We know that there are still businesses still report that there are shortages and labor shortages and things like that, which are now being addressed. In addition, even when the shortage is alleviated, there should be lags before that shows up in economic activity and inflation. So there may be some more there. I don't want to give up on it yet at this point. I also think that having restrictive policy, we have the highest interest rates in some time. I think that it may be that takes longer than expected to do its work and bring inflation down. I am confident that we will do that, but that we will get inflation down to 2%, and ultimately we will do what we need to do with our policy rate.
And just to bring in a question that one of our members of the audience asked here, I mean, you referred to it briefly then. But from Edin at
looking at the charts,
ORV,
how am I not
he
pumped
asks,
this?
do you entertain the possibility that
How am I
returning
not
to the
pumped this?
2% target will not be possible with the current level of the Fed funds rate?
So I think, as I just mentioned, I do think it's really a question of keeping policy at the current rate for a longer time than had been thought. I think by many measures, the policy rate is restrictive.
That's all you need to say, pal. Keep saying shit like that.
Is it sufficiently restrictive? And I think that's going to be a question that time will have to tell. Entertain the possibility is, that could be a very small probability, but I have said that I don't think that it's likely, based on the data that we have, that the next move that we make would be a rate hike.
I think I showed
it's
at the
more
bottom.
likely that we'll be in a place where we hold the policy rate where it is.
And is there any particular component of inflation that concerns you? A lot of people in the US have been focusing on housing and that segment, but is there that, or is it something else that?
So we think of it in three buckets. The first of which is just goods inflation, and goods inflation was negative for 25 years, mildly negative because, of course, globalization, and many goods were manufactured elsewhere and shipped at lower costs. So that, I think, is performing broadly as expected over time. We had very high goods inflation at the beginning of the pandemic because of the supply chain issues. That came down a lot, and I think we expect that. Housing inflation has been a bit of a puzzle because current rents have been low. Current rent increases have been low for some time, but they're not showing up. That's not showing up in rollover leases and in owner's equivalent rent. So, I think what we've learned is that the lags between a decline in market rents and it showing up in the measured inflation for housing services is long. Their lags are longer than we thought. But as long as market rents don't go, as long as they're going up at very modest levels, it will show up. It's just a question of when. I think our estimate of the lags is there, and so you've got to look at that that may affect your confidence, but we have to wait for it to happen. In terms of the biggest part of it is services inflation, non-housing services, and that's more than half of the index. And you know, it's less interest sensitive. It's very sensitive to wages and that kind of thing. We had made some progress there, if you look at, particularly if you look at the market-based aspects of it. But that's the one that I think may take the longest. At the same time, it doesn't need to go to 2%. It wasn't at 2% before the pandemic. You need the three of those to come out in some way that they're at 2%. And I'm confident that we will get there.
Excellent. And just to go back into this theme of divergence, I mean, to summarize your answer, it seems that, you know, you think the geopolitical aspect of the Europe being closer to Russia, and also the aspect of the, I guess, not only the scale, but the design of the fiscal response, you know, are the primary drivers of this divergence that we've seen between the US and Europe. Chair Powell, what would your thoughts be on this? Are there other factors that you think are worthy of consideration when trying to understand why the US and Europe seem quite different economic beasts at the moment?
So I agree with all of the factors Klaus laid out. I would add we're probably also benefiting from a sort of strictly accounting GDP standard from new workers coming into it to a large extent. I think the issue really is, and this is an issue that you know, that the European economic policymakers are very, very focused on right now, is over the longer run, Europe's productivity growth has been about half of the U.S.
Oh crap!
And
what the hell?
that's so ultimately all you've got is hours worked, and that's largely a function of population, hours worked, and then output per hour. That's going to be your economic activity and growth. And so productivity is, you know, really the thing that can enable living standards to rise over time. And you know, there are a lot of theories on why that might be. I think from an American perspective, I would tend to point to the more flexible labor market, and also a more fully built out set of capital markets, which is parts of which are very focused on funding you know, early stage innovative companies. So it's not just a bank-centric system. We've got a very highly evolved you know, financial system. That may be another factor.
Yeah. So plenty of other reasons there that are worth mentioning, I think. Turning back to you, President Nutt, you gave a pretty clear signal, I think, that we're going to see a move in June. But a lot of the, you know, the questions that people have put to us today have, you know, stressed this point of, usually there's been this sense that the ECB has been following the Fed, and it's raised a bit of a question mark as to what degree can the, you know, the policies of, you know, the two major global central banks, with apologies to the Bank of England, how much divergence can we really see? So, you know, to what extent do you feel constrained by what the US central bank does, and would you perhaps be reluctant to cut in July should the Fed want to, you know, stand pat and leave rates as they are for the foreseeable future?
Look, I think if you talk about monetary policy of big central banks like the Fed and the ECB, that monetary policy always takes place in a global context. I mean, our markets are interwoven to a large extent, etc. At the same time, we both have clear domestic mandates that look on an economy which may be 10, 50% open, but it means at least 85% closed economy. So much of our inflation is actually being triggered still by domestic factors. So what we simply need to do is construct our own inflation outlook for the euro area. And yes, Fed policy is, of course, one factor that has an impact. And if you think about international spillovers, the first things that comes to mind is through the exchange rate. If the Fed were to run a tighter ship than we were going forward, then probably that would lead to some dollar strength and euro depreciation, which of course leads to additional imported inflation. But at the same time, you will also have a spillover.
No, look at Jerome Powell's like, I know this motherfucker ain't just try to come at me on stage like that.
Internationally,
look at these, I know that motherfucker didn't try to come at me on stage like that.
In tandem, if you look at the last few weeks and months, bond yields in the euro area have gone up significantly without there being a true euro area reason for doing that. It was just the spillover from the US. And that effect is, of course, disinflationary. So if you look at the two effects, it's not so clear which of the two will dominate. And it's therefore also not so clear whether the developments in the US will really have a meaningful impact on the inflation outlook in the euro area. I don't think it will change the direction of travel in the euro area that much.
So you'd be willing to cut in July too?
Well, we've been saying all along that we follow a data-dependent and a meeting-by-meeting approach. And I keep repeating here, it is essential what is happening in the labor market in particular, because services inflation is still the main remaining driver of inflation in the euro area. So we will simply have to follow the data as it comes in, both on underlying inflation trends, the labor market.
Keep on going, baby.
And that's why there is no commitment.
Keep on going. Let's keep this party going for as long as possible.
We will just follow a meeting-by-meeting and a data-driven approach. And data, when it comes to the labor market, it's really about the comprehensive assessment of the labor market. It's too simple to just look at sort of contractual wages. Contractual wages are coming down. But one of the problems now is that we have negative productivity growth in the euro area. We had negative productivity growth in Q4. In Q1, again, it seems as if growth in employment exceeds.
See, our boy
growth in
Powell
GDP,
only
which
pumps it,
means that
baby.
probably next
He
year we'll
only
get
pumps the
another
market.
Negative
He only pumps
productivity
it.
growth number. And that means that unit labor costs are actually still going up. And then the question whether profit margins are capable of continuing to absorb these unit labor costs, that's something that we really have to assess over time when we decide on future steps. So nothing, no commitment whatsoever, open mind for anything beyond June.
And just to turn back to the issue of US inflation for a moment.
Oh shit, I'm up 63 points. I just realized that shit.
We did see a remarkable
I'm up
drop
63 points on this play.
of inflation last year because it was, just so aggressive the year before that, that there is this sense that, there's still a public perception that prices are very high. How difficult is it to really feel as though you can keep credibility at times?
I took one loss earlier on.
Public institutions is
but obviously that loss got
from Jerome Brookman, who's
that
from
basically took it out. So I'm up basically $700-800 right now.
Is kind of everything, and we only earn that one way, and that's by achieving our mandate for the benefit of the public over time. And also, I would add, a part of that is sticking to our knitting. Don't take on politically fraught issues that are really not our mandate. Do your job and explain as best you can what's happening in the economy. Of course, the economy the post-pandemic economy has surprised everyone.
Yeah, we might get up to this 400.
Single out any single
the way that he's pumping it so far.
Or group of forecasters. It's just been many things that were not supposed to be able to happen have happened.
Let's look at the ES.
We've made real progress on inflation. We're far lower than we were. I was
saying ES is at that level.
At the beginning, we were very
ES is at that 58 level.
Very high inflation we saw might be quite difficult to bring down without a kind of significant
Actually, I mean, shit, let's see.
In employment and weakening economic activity.
Let's see.
That didn't happen.
Nah, we'll wait because shit, the NQ is just pumping right now.
People are unhappy.
Actually, no, let's take it, man. Let's take it. Why not?
I fully appreciate that, and a big part of that, I think, is go to the store. Prices are high.
Reminder: this is a gambling account, people. I am not trading an account that. I'm not trading my regular account. This is for this event.
They're not wrong. I mean, they're suffering.
I'm just gambling right now.
People at the lower end of the income spectrum are very hard hit by inflation from the start, which is why we're so strongly committed to restoring price stability and keeping it in place as long as possible.
And just to turn back to Europe now and to the Netherlands in particular, we're sitting in a venue here that's really testament to the power of trade, for good and ill. In an era of deglobalization, when we're seeing daily headlines about tariffs, and how does the Netherlands as a small open economy, and indeed the Eurozone as a very trade-dependent region, really thrive?
Yeah, that's a difficult
this could go to 400.
I mean, it goes beyond saying,
let's test it out, man. Let's see if it can go to 400. Probably 490.
Absolutely, not a
that
positive
88
development for the euro area, and that we watch. With
88 to like 90, because she likes to front run it. We'll see.
Fragmentation is
I'll put
there.
this
The train
right
has
here
left the
because I don't want to get
station.
stopped
So,
out. I want to see if
we
it's
have
actually going to get
think about
hit.
sort of the ways that it can manifest itself and what we can do to try to
And let me see if I can try to
address
find somewhere
its
to add to this
consequences.
position.
There is a sense
I think this is
that
a good spot to
international
add.
business
I'm gonna
is
add
actually
here.
to some extent
I'm adding.
more resilient to
gonna
political
add right here at the
fragmentation than we
21
have been
EMA.
thinking beforehand. So that international trade is a little bit like a river that sort of tends to find its way, even if some obstacles are being raised here and there. But of course, the fragmentation, it impedes the diffusion of technology across borders. So that means lower productivity growth everywhere. I would also not underestimate the limitations that it puts on our capacity jointly and internationally to solve global problems. In a fragmented world, suppose we had a global financial crisis again, like in 2008, 2009. It would be much more difficult
relax.
to
I'm
get
in
the
long
G20
with all
around
that.
the table and to agree on a concerted remedial plan as we did in 2008, 2009. Think about climate change, etc. What can we do about it? Well, I think in Europe, there is still a lot of untapped potential to at least strengthen our internal cohesion. We're not tapping the full potential of the single market. In many, many places, the single market only exists in a name. We don't have capital markets union. I think we are really doing ourselves a disfavor. We don't have a banking union yet. And so we are missing out on opportunities to strengthen international trade, or sorry, inter-European, I should say, trade.
Jerome Powell's going to whoop his ass when he gets to the
economic
back.
as well as financial.
You can see how uncomfortable. Just like, why the
Do you have
fuck is he
anything to
saying
add
this
on this
shit?
topic? I know it's something that's
Like, he is
featured in the
straight talking
5
shit
minutes
to him
about
right
the,
there.
You know, links perhaps between trade barriers and inflation and so
It's
on.
like, what the fuck
Do you
was
see it
that?
as a risk?
So you out there talking about climate change and all kind of other bullshit.
Very hot
The
political
fuck?
issue, not just in the United States, but everywhere in the world. And not trade policy, of course, not the job of the Fed. So, I mean, we, as I mentioned,
And you see how he's addressing it right now? Like, he's like, what the fuck is the dude saying? Like, why is he saying this stupid shit?
Kinds of economic policies, as fun as that might be. You know, the elected government has to deal with these things, and they have to deal with the public on them. And they've given us really important assignments, and I think we need to honor the decision not to give us that.
And I appreciate this is
Yeah,
also
congratulations
an awkward
on that,
topic,
Jonathan.
but it is deficits in the sense that the national debt is
If you want
forecast to
top
rise
step
by
X,
the
lock yourself
Congressional
out, man.
Budget Office
Close
quite
the charts.
substantially over the next 10 years. Does that make your life trickier as Fed chair rather too?
I don't think it's not that it makes my life more difficult or the Fed's work more difficult, but I think it's you know, utterly non-controversial to say that U.S. fiscal policy is on an unsustainable path. Not that the fiscal position itself is unsustainable.
We'll see. I'm not going to take this short. I'm not going to take it short.
That we have.
But it does
full
look like I
employment
should take it
and,
short. It's starting to look like I should have took it short. God damn it.
And it's, we're going to have to deal
All
with
right,
this
man, whatever.
sooner or later, and
Whatever,
sooner is a
dude.
lot more
Whatever.
attractive than later. I do hear from elected people on both sides of Capitol Hill and in both political parties that they do understand this.
Mm-hmm.
And I think you mentioned the Congressional Budget Office. I think everyone should be reading the things that they're publishing about the U.S. budget deficit and the path, and should be very concerned that this is something that elected people need to get their arms around sooner rather than later.
And you've noticed a lot, you've noted a lot that these supply side benefits that you thought might come, in 2021 or 2022 did actually arrive in 2023. Now, what sort of benefits from the supply side do you think we could see in 2024 and beyond?
So I think we probably have realized most of the reversal of the pandemic.
So we just ran this high here on
but not all of
NQF.
it. But I think we get
We ran
more
this high right
sort
now
of the final parts
on the NQ.
of the supply chains really getting sorted out. As I mentioned, the surveys
So
of businesses, they still
I think
say
after Powell
there are
gets done
shortages.
talking,
They still
I
say
think
that
the market
they
may
have a
dump.
hard time hiring people for that matter.
We may
So
get a
I do
dump
think
after the
we're still
Marcus
getting
after he gets done.
very substantial numbers of people coming to the country and going to work. Let me add, immigration also not a policy that the Fed works on or has opinions on, but I'm just giving you the straight economics of it. People come in, they can get a work permit, they are getting work permits, and they go to work and they're paying taxes, and they're creating economic output, and there are millions of them. So it's alleviating the labor shortage that we had.
See, we talked about this as well. That's why that's why they're allowing the
probably helped at the margin
immigrants to come to this country to fill in that labor market shortage, because everybody here in the United States are too fat, too lazy, too depressed, too this and too that.
It should be neutral on inflation, but in the short run,
having immigrants come from all over the world,
that's a factor too.
It's kind of like a reset.
And just to kind of turn to these like
these people haven't, I mean, they're coming from war-torn countries, poverty, so they're going to come over here happy to work, happy to get something better than what they're used to. Versus here in the United States where people are so entitled, and people actually think that they're the only people that exist in the world and everybody else is just characters, even though they don't provide anything to society whatsoever. Crazy, right? But that's just the mindset of this generation.
So our star, for those of you who aren't, central bankers who read every word of every story Claire writes about us, our star is really a longer run concept. Our star is a neutral interest rate that would neither push up on economic activity nor bring it down at some hypothetical future time when we're at full employment, we're at 2% inflation, and there are no shocks hitting the economy. So think 5-6 years down the road, there's this sort of nirvana out there. Its relevance for current policy making
that's too much work.
Limited, and I think you need to say
too much work.
Really, what we're doing.
You know that the court system, the immigration court systems, is backlogged, and it is usually 10 years is the minimum.
Is policy tight enough?
The economy needs these laborers now.
We're thinking about
they're actually taking this model from Dubai. Dubai has the same model where they have immigrants come in, because the people there are too entitled to work. They think working is beneath them. And that's why they have immigrants come into Dubai to do all the work for them. So they don't have to, so they can live in their fairy tale worlds where, oh, I'm too good to pick up my trash, or I'm too good to do this and that. I drive a Lamborghini and that's my Wednesday car at 1 o'clock. I mean, that's just the mindset. And that's how they got immigrants over there working.
Neutral rate is when we do policy, when we make policy, we're thinking
it's the same thing. Same thing.
Our policy delivering what the economy needs to move it toward the.
And then if you give them documentations, you give them rights. You make them full citizens.
So
now you got to really take care of them.
I think
why would anybody want to do that?
Like, is because now the rates are.
Damn it! I should have took that damn short. Damn it!
At least there's this sense in which people
it.
are thinking, how low will rates go? Would you?
And then that's something else that they can hold over these undocumented immigrants. You can hold that over their head. I mean, the game is not about money anymore. When you become a billionaire, or when you have an unlimited supply of money, it's not about money anymore. It's about how much people you can control. And you can control people by dangling that carrot over their head. You want to go back to your war-torn country? You do what the fuck I tell you to do. I mean, this strategy is as old as
all of those
dirt.
Things lead us to believe at this time that
it ain't nothing new.
Is restrictive, and that it looks like it will take longer for us to become.
All right, so I should have got out. I saw it. That's why we always trust the charts. I saw that it swept that high, and as soon as we got that sweep of that high, price went out. And look at that! Oh my God!
What's the rock?
I should have took it at 58. I should have took it.
It's a difficult question to answer because there are so many moving parts here. But what I would say is that
I should have took it. I should have took it.
The likely nature of the shocks that will hit us in the future. We came out.
So right now, if I got it at 58, like I wanted to, and that shit is still going. So I would have hit my 10 points right here.
For ever lower prices coming
10
from the rest of the world.
points.
Which meant that for almost 10 years, we continuously had to approach our inflation target from below.
And I'll be up about 5-6 points right now. Probably get my second target hit. Damn, I should have took it, man.
It's more likely that the shocks hitting our economy will actually be of the nature of negative supply shocks, not positive supply shocks. And if you think that through, that means that probably we will have to approach our inflation target more often from above than from below. And that probably suggests that we are not, that at least I don't regard it very likely, that we will move back to the time in which we had a continuous sort of a fairly persistent low inflation equilibrium with very, very low interest rates. We probably have to, on average, run a slightly tighter
Hey
ship.
man, these
Because of the
well, I don't think I
nature
have
of
to tell you
these
this,
shocks that
Alfred, but
are,
just be careful,
currently
man. Don't get
relevant to our
blindsided by that 800 goal.
And just to come
Take
back
them
to
good
something
setups,
that I
baby.
think has been kind of in the background here for quite a lot of the discussion about high interest rates taking possibly a while longer to have the desired impact
So
on
that
some
high got
pockets of the
swept.
economy.
You got that drop.
Now, how do you see
You got that
Is
draw right
this
back into
a
support.
legacy of
And I'm gonna
this
try for a
very
long, man. I'm gonna
low
try.
interest rate era? And how
I'ma
do you
try
really
this.
address that when
Keep my stop tight.
when it
But I
comes
think
to
actually, I think
monetary
this actually
policy
might
that,
be.
is there just going to be this lag from now on that didn't exist, say, relative to pre-2008?
So I think if you look at the bigger picture,
Yeah, I think
we've
this might
seen
actually be.
the labor market's a good place to
I
see
think maybe I
this.
should short
You've
this.
seen
Maybe
demand for workers
maybe I should
cooling
short
off pretty
this.
substantially. The ratio of vacancies to unemployed people, for example, has gone from more than 2 to 1 to now 1.3
Yeah.
to 1.
Damn it!
And it was
Damn, I should have
1.2
took that
before.
damn
So
short.
That's a
God
declining
damn it!
demand. That's demand related. You also see wages
Oh, we got the
coming down. You see
71
quits
on the NQ.
coming down. So I think that tells you that policy is probably restrictive. I think it's also fair to say, though, that the U.S. economy is different this time for a couple of reasons. One is that people financed themselves into very low rate mortgages, and now they won't move because they would be moving into a higher rate mortgage if they did, and they would be throwing a lot of value away. The same is true of businesses, many of which, as indeed you would expect, have termed out their debt. And so they're not feeling the effects of interest rates. So it may be that policy is hitting the economy not quite as strongly as it would have if those two things were not the case. Notwithstanding that, I think the overall picture still is policy is working. It's weighing on spending. It's weighing on interest sensitive spending.
I think I should have stayed short on this one.
The labor market.
I should have stayed short on this.
It's a question of restrictive policy. As I mentioned, our policy is the highest it's been in quite some time. The rate is, at 5.25% to 5.5% is high relative to recent history. So we think that it's probably a matter of just staying at that stance for longer, and that's how we're thinking about it.
And I mean, you note about housing and about the standard model in the US being I think I'm right, the 30-year mortgage is kind of the standard mortgage product. I think here in the Netherlands, flexible rates are quite more fixed rates.
Yes, absolutely.
So fixed rates are quite common too, but I imagine with shorter
10,
shorter
15,
duration.
an average mortgage, I think, has an average maturity of like 16 years. Of course, that's a little bit endogenous because of the low interest rate period we had for so long that, of course, mortgage holders tended to extend the maturity. So now, lately, it's been coming in a little bit. But still, we have a lot of fixed rate borrowing in the Netherlands. And that has, of course, also mitigated the impact of the monetary tightening, which has been stronger in those areas where there is more variable rate borrowing. But in general, I would say 85% of all financial intermediation in the euro area runs through the banks. So when you look at monetary transmission in the euro area, you have to look at credit. And credit growth has more or less come to a halt. As a consequence, we increased policy rates by 4.5% within 14 months. Credit growth came to a halt. That was a feature of the policy, not a bug. And credit has been flat for quite a while. And now we're also beginning to see the first signs of life again. Now that there is an anticipation that our next interest rate move will be a reduction of rates. You also see the first signs of recovery in credit. So in that sense, I think this is more or less how you would expect monetary transmission to take place in the euro area.
And how much of an issue has that been for you in the US, where we do have this, where capital markets play a far greater role, and where, for reasons that were never quite clear to myself, the turn of the year, the markets were predicting, 6 interest rate cuts by the Fed, and pricing credit off the back of that, and there being quite a big,
Oh, you bitch.
quite
See,
substantial
this is why you
growth
can't keep a tight stop with
growth
NQ.
in
She
lending
requires
and
sacrifice.
refinancing over the first couple of
She
months of the
requires
year. How much
sacrifice
more
in order to be
difficult does
successful
that
with her.
really make your task that the banks on as big a vehicle?
Well, so for what it's worth, it's a minority of intervention, but banks are still important, and particularly for small and medium-sized businesses that don't have capital market access. And credit has been tighter for some time now, particularly in the wake of the turmoil we saw earlier last year. But still, credit growth has been modest, and that's another sign of tight financial policy. So that's part of the picture. I think the fact that we have capital markets are so important for many consumer loans of various kinds wind up in the capital markets or securitized and are not held by banks. It's just that
I think we get another move down, actually. I think
credit
if we
machine
touch this right here,
for people.
I wouldn't be surprised if we get a move down. But
those are short-term interest rates. I think that the ones that are longer-term interest rates are the ones where they're not feeling it.
Actually,
and that's really mortgages.
You know what? That's what I'm gonna do. I'm gonna go for it. I'm gonna go for it.
Turn out their debt. I think other forms of consumer debt are short-term, and
I'm gonna go for it.
The surveys show that people think it's not a good time to buy durable goods like cars and washing machines, and the reason is it's a floating rate loan at a very high level.
Yeah, absolutely. And when you look at the banking system as a whole, we've seen some jitters, I think, on both sides of the Atlantic, but on the whole, it seems both systems are relatively stable despite quite substantial rises in interest rates. Has that surprised you at all?
No, that's too low.
To President Knott.
Has it surprised? Not really. Our banks are particularly our large banks are strong, well-capitalized, very successful competitively, globally. They're in I think one of the reasons why the recovery broadly around the world from the pandemic has been strong as opposed to the one from the global financial crisis is that the very large financial institutions came through just fine. The U.S. banking system overall is in good shape. Banks are making loans, as I mentioned. Credit conditions are a bit tight, but that's part of our policy.
Yeah, don't give the gains back, baby. Don't give it back.
I wouldn't say I'm surprised. I think we obviously had a period of turmoil early last year, and we acted pretty quickly to stem the turmoil and also to go to work as a supervisor and make sure that
relax, bro. This is going
had
man.
good plans on liquidity, had capital, understood the portfolio losses that they have for longer run securities, and are in a position to understand and manage those.
Well, I think it's pretty clear that if you have such an unprecedented rise in interest rates in such a short period of time, that this constitutes a massive shock to the financial system. So when we were sort of in the process of tightening, of course, this was sort of enhanced monitoring, an area for enhanced monitoring. Now, I think we can say so far so good. I entirely agree with Chair Powell that the core of the financial system has held up quite well. And I think this is in part, I think the success of the financial reform agenda that was rolled out after the global financial crisis under the aegis of the Financial Stability Board, which was very much focused about stronger capital, stronger liquidity, stronger risk management at the banks, which were at the core of the financial system, and that has clearly paid off. Now, there have been some idiosyncratic accidents here, the second-tier US banking system, Credit Suisse, but I think there were idiosyncratic factors behind it. The banks that arrived into trouble in the US were not even part of the Basel III arrangement and the financial reform agenda. But I would say so far,
you was
so
in
good.
10 minis? Wow, Alfred.
The question marks today are much more in the non-bank financial intermediation space, where we have seen a couple of quasi-near miss accidents, I would say. The Dash for Cash, the LDI, the Archegos, the commodity traders in February 22. So these have all been pockets of vulnerabilities where you saw a combination of excessive liquidity mismatches combined with pockets of hidden leverage that we were unaware of before. And that is now also front and center of the work program of the Financial Stability Board, much more the NBFI space. Of course, we have to learn the lessons from the few banking failures that we did see, and that is continuous maintenance. But I think if you were to ask me, my main focus is more on the NBFI space than on the banking space.
We'll come back to Credit Suisse because I know that's a topic that you've spoken about quite a bit, and a few of our audience have got questions on that. But non-banks, would you share that, that sense in which they're the big lurking danger in the financial system right now?
I guess I would say it this way.
You know what?
In the U.S.,
I'm gonna try, man.
non-bank
I'm gonna try.
participants by non-banks in lending activities, for example, has been growing very, very fast.
Because with 319,
it's a fairly
319 might be the level.
In many cases, whole markets are being now taken over.
I'm gonna try at 319.
Majority for non-banks. And so our job is to
Try
monitor that very
318,
carefully
317.
because I'll say a couple of things. One, there hasn't been a downturn yet. You worry about very fast growth in anything. It just kind of raises financial stability questions, and you wonder, is it a bubble? What will happen, and will it deflate, and that kind of thing. And so you want to be watching it carefully. I will say though, it's different. Some of the we've spent a lot of time looking at it. I just point to a couple of things. One is many of the lending structures are not subject to run in the way that banks have traditionally been. The funding tends to be from limited partners who have their investment locked up for many years, and they can't get it out. So as opposed to the danger with a bank can be that all the depositors want their money at the same time, and that's the traditional problem that we've been trying to solve with bank regulation for hundreds of years.
I see what I'm doing.
But these are different. They don't have, and runs are responsible. Bank runs or things like that are really responsible for an awful lot of the problems that happen in one form or another. So the non-bank financial sector doesn't have that as much. Another thing is the ties between banks and the non-bank financial institutions are substantial and growing. So there's plenty of monitoring for us to do there. It's not obvious to me that at this point that it's a net loss to financial stability, but I would say our jobs are to monitor it very carefully and thoughtfully and understand the implications.
And just to return to the topic of Credit Suisse, we had a question submitted ahead of the event. In your keynote speech at the 7th Annual Conference on European Systemic Risk, you talked about events surrounding Credit Suisse. What can the Foreign Bankers Association, to which we're speaking today, and the Netherlands Bank learn about the collapse of the Swiss lender?
Well, I guess the main thing one can learn about the collapse of Credit Suisse is the huge importance of governance within financial institutions, because it is pretty clear that the events that led to the failure of Credit Suisse were not sort of a classic lack of capital or, let's say, too much credit risk relative to the capital. It was management failures, there was outright fraud, there were misinvestments, there was misbehavior, even at the top of the institution. And if you have a series of governance failures at an institution, it will lead to an erosion of confidence. That erosion of confidence will lead to deposit runs, which, by the way, already took place much earlier than March 23. There was already a significant outflow of deposits also in the fall of 2022. And so we have to remind ourselves, it is not only about capital and liquidity. Governance of financial institutions is of utmost importance.
And are there any questions about AT1s and the treatments of those particular instruments that you think can be drawn in the Dutch context?
Yeah, of course, there was a case where AT1s have been completely written down. So I think it behooves us to look a little bit deeper into this issue. Why the AT1s were drawn down, whereas equity was not fully written off. This was, by the way, completely in line with the contractual provisions of the AT1. There was just that not all investors had really read the contractual provisions. So They pretended they were surprised by it. But I think from every case, I think we should try to draw some lessons. But in this case, at least it allowed the authorities to write down 16 billion Swiss francs, which was helpful to generate the interest of UBS to actually take over.
And now turning back to you, Chair Powell, we've got a very nice question here from Liu Zhan from ICBC, who asks, during COVID, the Federal Reserve applied high levels of monetary stimulus to further raise asset prices and support growth. Bloomberg called you Wall Street's head of state as a reflection of how strong your actions were on asset prices and how profitable your actions were for Wall Street. How does that make you feel? And how do you look back at this with the benefit of hindsight?
It makes no point of contact with the way I remember those days, so whatsoever. So I would just say this: if you put yourself in the place where we were in March of 2020, no one knew how long it would take to have vaccines. No one knew whether millions of people were going to die fairly quickly, or how long the economy would remain closed, or was it even going to be possible to reopen the economy if it had to be closed for a year? What was that going to look like? So I think it was so uncertain that I came to the view, and my colleagues did too, that we really needed to use our tools in ways that we hadn't before, because I would never have been, if things didn't work out, I didn't want to, if we had to go through a really deep, lengthy downturn, I would not want to have to explain why we didn't do that. So we did, and what happened is we announced these very aggressive, vigorous programs to support markets that we had never had to support before: the municipal market, corporate debt, things. These were red lines that we said would never cross. But the thing is, when we made the announcements, the markets healed themselves. So we made very, very few loans. We had something like 6 trillion in lending capacity. So the announcement effects of the things that we did, it really worked this time. So I think, broadly speaking, that the initial response was very successful and involved ultimately very, very little in the way of actual lending, a lot of announcements. Then the story goes on, and you have the reopening and the inflation, and we're still living through that. I think we'll have to judge that from a greater distance.
Anything you'd do differently in retrospect?
There's nothing I would do differently in the initial response. I think we did very well, and I think that the world continues to benefit from the strong response that we took, and we really avoided an awful lot of bad tail risk there that could well have come due. Again, I would say on inflation, when inflation kind of unexpectedly arose in the first quarter of 2021, I think we're going to need to, I've tried to resist reaching, conclusions about that episode until, it looks so different now than it looked a year ago, for example. All the progress we made in 2023, I think we're talking about it in a completely different way now. I think 2-3 years from now, we'll be doing the same. So I don't want to try to learn lessons, in the middle of the story.
Sure. I think that's very fair. And another question here that's just been submitted from Abir, who asks, is Chairman Powell confident about the degree of independence of the Federal Reserve in relation to the executive branch of government? Do you think you have the powers that you need to defend your independence?
Yes, without question, I do. I think when I talk to elected representatives in both political parties in the House and the Senate, and I think there's very strong support on both sides of the aisle, on both sides of Capitol Hill, for an independent Fed. I think people do understand.
You said without question, of course.
We're just there to do our job on a non-political, nonpartisan basis. Nobody's perfect. Everyone makes mistakes, but the Fed is doing the absolute best we can with the tools that we have and the understanding of the economy that we have. I think that is very broadly understood and supported on Capitol Hill. So I'm less worried about that than the sort of things that have been in the press lately might suggest.
Damage to the state law.
The same question to you. Do you feel as though the ECB's Independence is well enough enshrined.
Oh yes, I think the
That is
ECB, I
right.
think, has one of the strongest statutory independencies of maybe all central banks in the world. And I just, let's zoom out just for one moment. I mean, this inflation shock that we had, if you compare it to the previous inflation shock of the same magnitude, which was the 1970s, when we didn't have
I just learned something.
independent central banks, the main difference why I think now we have a credible prospect of getting the problem under control within, let's say, 3 or 4 years, while in the 1970s it took 10, 12 years, and the disinflation was so much more painful. The sacrifice ratios were so much higher, high unemployment, etc. The big difference is central bank credibility. During this huge inflation wave, inflation expectations continued to be well anchored. They never drifted away from 2%. This is so different to the 1970s. And why were inflation expectations so much better anchored this time around? Of course, that you can have a debate about it. It's about psychology, etc. But I would posit that the higher degree of central bank independence is clearly an integral part of that story. So this is a very tangible way in which we can show to society the benefits of having independent monetary policy making.
Would there be anything that you'd like to add
All
to
right.
that on the
I'm trying to
case for
short
central
Powell.
bank independence?
That's my bad. I don't know
well,
that.
I think
You
Klaus said it very well. I mean, and I think in the United States, we don't have quite the constitutional, I think, support that you have for it. It's a statutory arrangement. It's an institutional arrangement that has benefited the public. And that's all it is. Congress can change it any time they want. It would take Congress to change it, though. There's nothing the executive can do. And again, I don't think that's likely. But
damn. I should have just trusted this damn long all the way down here.
What we're doing
I should have just trusted
our
it.
heads down, working on the things we're
That's why we
supposed to
gotta
be
trade the
working on,
charts, even with
doing our
Powell. I
absolute
should have just
best
trusted it.
And
It
explaining
did look like they was
ourselves
trying to
as best we
continue it
can,
down, but I
acknowledging
should have just trusted the law.
and going forward.
I should have just
and-
trusted
and
it.
that we will have the faith in our independence that we need, and I think we do.
Or maybe
have
I'm
that
too
now,
early on
and
the
I'm
short.
determined that we'll continue to have it.
And I think that's a very suitable note to end this discussion on. I'd like to take this opportunity to thank the Foreign Bankers Association for putting on this wonderful event, the organisers Richard and Maxine, at Cognito Media, our audience here, and many of you joining online, and of course our panellists. Both of you have been superb. Thank you for joining us, and enjoy the rest of your day.
Thank you. You're welcome.
Now the dump.
No, please sit, because we just Jake, sit for a minute,
come
because we
on.
would like to thank you,
Come
obviously, also
on.
from the
Come
whole
on.
board,
Come on.
from the Foreign Bankers Association, who has asked me and given me the honor to say some closing remarks after this.
Man, nobody
really
care about what you got to say,
impressive
dude.
session.
Ain't nobody care about what the hell you got to say. All right. All right, so let's see how bad it is, man. I think I gave back all them games for real. Yeah, I gave it back. Basically gave it all back. I gave it all back. I should have trusted this. Price was sitting at VWAP. Price was sloping up. Honestly, I don't know why I just wanted to short it. I don't know why I wanted to short it right here. But obviously that was a bad decision. And I'm mad that it ticked me out instead of just going short.
Order filled.
I think now here might be the after the Powell dump. But I don't know if this is gonna be clean or not. Man, come on.
Order filled.
All right, okay, all right. So this, hey man, I gotta get it out. So, kind of going back to a serious note. I mean, we talked about everything that this man had said before, and this is why I think somebody asked me, was I going political? No. You just have to understand these geopolitical, these economic factors, because I already knew, or I didn't know anything. But if Jerome Powell said something, I would like to understand what the hell he's fucking talking about. And that's why I believe that understanding the economic side of the market, the macro side of the market, is decent when we have these macro events like Jerome Powell speaking to another central bank and it seems like all these bankers, like they do not, or these feds don't live in reality at all. Like they live in a reality of the numbers that are on a document. That's the world they live in. And they hire, I guess, social justice warriors or whatever the hell they're calling them now, inclusion, whatever the hell they're calling them, just to say shit on TV that just sounds so unrealistic. Like no one lives in that fairy tale world but you and everybody else that chooses to live in that fairy tale world where it's all sunshine and rainbows and people don't operate on self-interest and we just love helping each other. Like that's not how people work. That is just not how people work. And it just shows just how removed from reality that these people are when all they deal with numbers all day. And they don't actually deal with humans, but they deal with the behaviors of humans, if that makes sense. Because economy is just basically basically the psychology of a community. That's all that really is. It's just basically psychology.
Order
and when
filled.
you have all that information all in one place, people's spending habits, the amount of money that they have in their account, how they engage with other people, it's just all after a while it just becomes a bunch of numbers, man. After a while, that's all it becomes, is a bunch of numbers. But this is going to be the last trade on this account. I mean, like I said, this was just a gamble, just to have fun. I'm not thinking about none of the trades. I'm just taking the trades. That's it. So hopefully nobody followed any of these trades that I took, even the winning ones. These are all gambles. All of them are gambles, and they're still gambles. That's exactly right, Alfred. That's why that's why they gotta hire a hitman. But y'all see the Boeing memes that's going around on Reddit where they said employee of the year is like their hitman. And Boeing, I mean, it's not funny, but it's funny. The situation itself is not funny because now I don't even feel comfortable going on a Boeing aircraft at all. Because apparently they care more about inclusion than actually having people that actually took the time to educate themselves and to earn the right to actually be in the position of a pilot or an engineer or anything that requires the decisions that they make that affect other people's lives. That's why I don't go to carnivals anymore. Carnivals, Disney World, I don't ride none of the rides because I just know that, man, they probably got some engineer that they just hired off of a what is those things called? A temp service. They just got
filled.
like a mechanic or something, and they just had to have minimum requirements. Do you know how to fix this? Do you know how to fix that? You're hired. I don't deal with that anymore because I just understand that that's what's happening. All right, so that was fun. Now let's get back into trading. But going back to your question, Jonathan, it's like it's easier to like if the undocumented immigrants become citizens, then they'll have the same rights as a citizen, and they're not being shipped here for that purpose. And if you want to understand what I'm talking about, just go look up how Dubai has their like the same situation where they import immigrants from impoverished countries. They take away their passport. They basically imprison these people, turning them into literally slaves. And they're not documented. They don't have no rights. They don't get the pay. It's literally slavery, but they're not going to call it that, obviously. They're not calling it that, but that's exactly what it is. All right, so at least on the NQ, we've had a rotation underneath this range, and we had a rotation higher above the range. Let's see what they're gonna do with this. Powell must be saying something right now, I guess. If the market's still pumping after he got done speaking. I'm still like, oh, this short right there. Like, this is why when you have a thesis and it's a good one, take it. Take it. Take it. I was looking for this level since yesterday at 58. And it took what the ES about what 20 million years just to get to this level. And even though it took it 28 million years to get to this level, it still worked perfectly. If I got in at 58, I only been in 2 points of drawdown. I would have got my 10-point target hit, and my runners would have got hit. And I think I probably would have been completely out of this trade. No, I would have had a runner. But my 10 points would have got hit, and my 15 points would have got hit. Yeah, it got hit. And I would have had a runner, and I would have got stopped out at break even +1. So this would have been a great trade if I. Same thing you can see. Just trying to set the standards. Low wage slaves, yeah. Yeah. Yep. Dubai is definitely beautiful for people that can afford to live there, but everybody else, don't be everybody else. And don't be everybody else. Don't be everybody else in Dubai. Because that shit is not, yeah. But we definitely could see some highs. We could see it, but we also got to remember that we got CPI tomorrow. So if I mean, and we're still about to let's look at SPY real quick. I mean, I know a lot of people see this is why you really can't be a bear. You can't be a bear in this market apparently, because we're just inching higher and higher and higher and getting close to all-time highs. And you can see that, I mean, yeah, people are buying puts. People are buying puts. But unless they're building a position, I mean, yeah, people are buying puts. 825, yeah, 825. I mean, technically, I guess this will kind of be neutral gamma. I mean, there is a lot of positive gamma, but we still got this big area where you can tell that, well, this right here lets you know that people are shorting this market. They are trying. They are freaking trying. They're trying to short this market, but it's not being, they're not being successful. Even though price is just flirting with resistance. I mean, price is literally flirting with resistance right now. Literally. Look at where we are. We are literally at the left or the right shoulder of this head and shoulders pattern. And if price continues to push up, we've taken out all-time high on SPY. Isn't that crazy? Only in a system where there's deficit spending, the Fed can print money whenever they need to, and the government allows it to happen because they get their percentage of that. Whenever the government needs something, they just go ask the Fed. That's why when Powell says, I'm absolutely sure. Yeah, he's sure. The government goes to him when they need money. When they need to buy their loans, who you think buy the bonds? Who you think buy bonds most of the time? The Fed. The Fed. That's who's mostly buying the bonds. Mostly. But yeah, so we're basically flirting with the right shoulder of this head and shoulders pattern. All-time highs is right here at 26. So we're $5 away from all-time highs on SPY. We're about what, 50 points or about 80 points, 90 points away from all-time highs with the ES, because I think it's at 33. So, and just as a rough estimate, I mean, I really don't even want to. Actually, I guess I could look at it real quick. So all-time highs is at, I think, about 533, I think. Somewhere close to it, yeah, 533.50 on the ES. And price is now trading at 253, give or take. So yeah, we're literally 80 points from all-time highs. 80 points from all-time highs. The NQ has a ways to go. All-time highs is at that 700, 800 level. So, I mean, it's about 300 points away, but it's not like the Nasdaq can't do that. It's not like it can't. I mean, shit. I wouldn't have got my 500 point play if it didn't move 300 points in a day. It moved 500 points in a day. So, I mean, obviously then the NQ can do it. So, you said the bears used to eat tuna, not to eat goldfish. I mean, that's all they can afford. They keep getting bent over and clapped. But yeah, I mean, like I said, my bearishness, my natural bear instincts to sell, I have to fight it a lot of the time. I'm not gonna lie. I have to fight that. I have to look at the charts and say, you know what? If you're gonna be a bear here, you're not gonna be successful. You're not gonna be successful if you're a bear here. But it's addictive to be the bear. You're like selling something that you don't own and getting money for it. It's like being a drug dealer. It's addictive. But we'll see. We'll see what happens here at this because technically we are at another head and shoulder pattern on the ES and on the NQ. We're literally at that right shoulder. So let's see if the bulls can push it past it. Obviously, the goal will possibly to take out this high, but if they're not going to be successful in taking this high out, price will definitely roll over. It'll definitely roll over. Yeah, shorting is very addictive. Like like y'all talking about, we make jokes about going to rehab with being a bear. I haven't gone to rehab, but shit, me and Smith has had a lot of conversations like, dude, why the hell are we shorting? Why are we shorting this shit? Why? It's so fucking addictive, man. Shorting is so addictive. Says, yeah, why are we short? But we keep on shorting. Like, there was one time where, well, I guess, I mean, shit, I can use it last week as an example. Well, I mean, no, I was shorted because we was at, or what I believe was resistance at the time. But back in those days where I would just short and just short for no damn reason, just because it pumped like this, and it's like, oh man, it has to short. It has to short now. It has to. It just has to. Nah, it doesn't have to. I wonder. I'm gonna take this. Why not? I'm gonna take it. We're still in the 50. Oh crap! Hold on. Oh crap! Wrong account. I almost made a mistake. I'm in the wrong account. Okay. I'm in the wrong account. So let's see. I mean, this actually
Order
could
filled.
be. Okay. Okay, well, there goes that account for at least for today. But this actually could be a good area to short, actually. This actually is a good short. This actually is a good short. But we didn't plan for it, so we're not going to take it. Or at least I'm not taking it. But I kind of wish I had an account to take this short, because this is a good area to short. This is a 4-hour chart on the Nasdaq, and you can see that we took out this high, We swept the high already. And then we got that liquidity gap right here. And we tapped right into it. We got a liquidity gap. Yeah, that actually might be a good short, actually. Hmm. Damn it, that is a good short. Damn it, that was a good short. All right. Hmm. Yeah, I kind of figured that was a good short. Now that Powell's out the way, now that we got Powell out the way, I think everybody's going to be shorting tomorrow. Everybody's going to be shorting CPI tomorrow. Everybody's going to be shorting it. Or they might try to fuck everybody. Like, yeah, you might short it. And then this is why I kind of stopped trading options. I mean, because you can't close your position until 8:30. So they can do it overnight. They can do it overnight. And then when it's time to open the market, they if price taps into an area of liquidity, they can rebound overnight. And that's the gamble with SPY options, especially zero DTEs, man. Especially them zero DTEs. And then we have, you know what, that could happen. We'll see. Because we have NVIDIA to save the market on the 22nd. So I wouldn't be surprised if there's going to be a market moving event between now and NVIDIA earnings. I wouldn't be surprised. Something crazy comes out, some stupid news story that the market really shouldn't overreact to, but they do. And we get a deep red day. So these institutions can come in and buy NVIDIA at a good price. And NVIDIA straights up and saves the market again, like it did the last time. He said, I need to go to sleep. Why do you think I need to go to sleep? Can't wait. He said, bro, you always do that. That block on levels. How much time? Maybe let's say the market. I'm sure it's PG. Yeah. Well, Alfred, hold on. You talking about taking this opportunity short? Are you talking about this? Or are you talking about just the fact of just shorting? I mean, if it was that easy. If it's that easy, being a bear is definitely something that you don't choose to be. Because like I said, when I first came into this market, all I wanted to do was sell. I didn't want to buy nothing. I don't want to buy nothing in real life. That's why when I came into the market, all I wanted to do was sell. You can't be a bear. You can't be a bull in this or a bear in this market, unfortunately. Let me see if I can get like a. You set it up by AMC and GME. No, I missed it, man. I missed it. I missed it. I got over that craze a long time ago. I mean, when I said that I was in at AMC at where was I in? Where was I in at? Because I was buying calls all the way up. I didn't buy any shares. I just bought calls the entire way up. And I listened to all the fools on the internet. And I was looking at my chart when AMC touched $72 or $74. Something told me to close out that call because I was holding up that call. I think I had one contract. I was probably up $600 or $700 or something, just holding it. And people were like, man, this shit is going to 100K. At the time, I didn't understand how the market works. So I listened to every damn body, saw that it was up $72. I was up 70 $700 on a damn call, and or around like it was either 7,000, however much it was. It was it was a lot of money at the time, 7,000, however much it was, and I let that shit drop on me. I had to close it it was still in profit. I closed it at like 50, 54 because it was consolidating at that level, and it seemed like it was never going back up above 74. And then after that, I kind of lost interest in it, honestly, as it continued to go down, and everybody was like, oh yeah, this is going to the moon. You just have to hold, you have to hodl as it continued to go down. And I just never got back into memes, meme plays again after that. Because I was just so angry with myself that I let all that profit go because I let foolishness tell me that it was going up. Brandon was in that GameStop, and Brandon told that story so many times. He thought he got out at the top. Boy, was he wrong. He said I forgot how much money he said that he would have had if he held at its peak. And he got in really low too. I think he said he saw $1,000 and he took it. And I was like, dude, I know he was punching the air after it kept going. Who wouldn't punch the air after it keeps going like that? Yeah. We'll see. We'll see if we'll get a failure here, honestly. Let's see if we get a failure. All right, Top Step, damn. Don't be rubbing it in my face. All right. All right, so got this area right here. I don't think they touch these highs. Like the bulls they're trying to take out these highs, but they haven't done so. They haven't done so, but if price does trade above these highs, then it is likely to trade higher. But it looks like we're about to rotate down actually. Yeah, Alfred, that's exactly listening to people on the internet. I should have just closed that damn thing. Talking about like if you really think about it, like think about what people were saying when AMC first squeezed up. People said 100K a share. 100K a share. Now, as retail, if you don't understand how the system works, yeah, 100K a share is possible, yeah. But there's things in place to where if AMC went above a certain price, it would have limited up. It would have stopped. They would have stopped price. The same way that they prevented it from going up, that's exactly what would have happened if it continued to shoot up. GameStop happened because it wasn't prepared for that. I'm not going to say that wouldn't happen ever again, but they wasn't prepared for that. That's why that happened with the GameStop. And because it happened with GameStop, now when they're talking about these meme stocks, they keep them in control now. The China stocks, though, I don't know what the hell these China stocks, they come into our market and they shoot up from $0 all the way up to 12, 2K, or wherever that Chinese stock that, whatever it, I forgot which one, or I don't recall which one, or the name of that symbol where it shot up to like 2K and it just kept on going and then it completely dumped. Forgot which, actually, let's look that up. But just imagine anybody having a 100K share, 100K AMC share. 100K. That just sounds foolish when you say that shit out loud, but back then, yeah, people convinced you. It was like, yeah, this is going to 100K. It's going to 100K, blah, blah, blah. Okay, so Okay, so let me see if I can find it. Honestly, I'm not gonna look too hard for it. I just remember it happening. I don't remember the actual ticker unless somebody know in the chat. Yeah, HKD.
She's gonna be us.
Mm.
What should I put on?
Anyway, yeah, the HKD. HKD. He's always the ones that you don't think he's gonna shoot up like that. That was life-changing money. Life-changing money right there. All right, hold on. You talk about the Hong Kong dollar? Was that it? The Hong Kong HED symbol. Oh, HKD. No, I got it right. China symbol. Anyway, but yeah, yeah, yeah. But man, I kind of, I mean, shit. Huh, this is looking like a good short. This is looking like a good short. Hmm. I don't want to jump into this. This is looking like a great short. I'm going for it, man. I'm gonna go for it. No, I can't do it. I can't do it. I can't do it. I can't do it. I didn't plan for this trade. But this is a good short. So let's actually talk about this short. Ah, damn. Uh, like, dude, oh, that's looking like a good short. Hmm. You know what? It's okay. It's not okay that we missed it, but this is definitely looking like a great short opportunity right here. But the only thing that's keeping me from entering this trade first is because we've been planning for it. Second, we got these EMAs in the way. I kind of we got these EMAs in the way. And shorting right here wouldn't have been a good it wouldn't have been good risk reward, but look at it work. Look at it work. Okay. Look at it freaking work. Hmm. Yeah, these EMAs are in the way. But this does look like a good short. Let's look at the NQ. The NQ is the same thing. NQ is the same thing. That was a good short. That was definitely a good short. 66, 36. That would have been a 30-point short. Damn, that was a good short. But on this, at least on the NQ, price is trying to be held off right here. If you get a break of that, I'm pretty sure that the bulls will come right back in here, right here. I'm pretty sure. But we're going to need a break below this structure right here. We need a break below this. And we can possibly get a retest of this low down here. Price could probably trade right back down into this. And if it does, well. Damn it. Ugh. But I guess if you're trading the NQ, the DOM doesn't give you any information at all. Looks like they are buying here at this level. You do have some buyers here, according to time and sales, but he says TLY. No, actually, I must have missed that one. TLRY. Let's look at that and see what that is. TLRY. Well, looking like that short worked out. Looking like it worked out. Yeah. So from damn, so that it jumped up. Dang, yo, rest in peace to the people that's back holding at 70. Rest in peace, yo. Rest in peace for the people that's back holding at 70. That is probably never getting back up there. Never getting back up to those $70. Rest in peace. I think today was full of learning lessons today. Today was definitely full of learning lessons. Trust your plan. Trust your plan. Trust it. Trust your plan. I wanted to take this short here on the ES. And then when it gave it a second opportunity to get in short, didn't take it. And then on the NQ, the same thing. I did originally take it short on NQ, but obviously I got stopped out on that play. But it is still working on the NQ. Still working on the NQ. This play right here, this is where I gave back all my profits on this play going back up. With this strong move down, I figured that they was going to rotate it lower, but they chose to get another retest of this level. And initially I was going to go long here, but I was like, man, I don't want to get trapped short. But apparently I should have kept this one long. I should have kept it. And we'll see if these bulls come in at 300. Honestly, I think for the rest of the day we may actually see price trend down. I highly doubt that we go higher knowing that we got CPI tomorrow. I highly doubt that. I mean, if we do go higher, but my money is going to be that either we're going to trade in a range or we're just going to get a price drop. Yeah, everybody's trying to get that Tesla money. Now that it's interesting when Tesla first came out, or not Tesla first came out, but Elon Musk was saying he made the patent for Tesla or whatever the hell he made public, available to everybody. He made it open source so other automakers can use it to go to a quote unquote greener world, replacing the gasoline car to the electric car. But if you think that that was ever going to happen, you're living in a fairy tale world. There are people that are rich on oil. They don't have to lift their fingers for nothing in this life or in the next lifetime if they can get anyway. There is no way that they're ever going to allow oil to be replaced by electricity. Ever. Especially these Saudis. The whole engine, like, their wealth is based on oil. You think they're going to let? I think that's if I'm not mistaken, I think that's what actually started the bad blood with the Saudis and the Biden administration, because you already know Biden with all this climate change talk and all the other crap that they talk about. As if you have the power to change the climate of the world. But I mean, people want to live in that fairy tale, so let them live in it. But once he started saying like they're trying to push the whole electric car thing and didn't invite Elon Musk to the table when he's been basically paving the road for electric vehicles. But there's no way that they would ever allow the electric car to completely replace the gasoline. Crude oil. Yeah, there's way too much money. A lot of people's lives would be changed if they were to ever allow that to happen. I mean, I find it interesting that every time that you hear somebody that creates a air-powered, water-powered, whatever-powered vehicle, that they mysteriously disappear, or at least that's what the headlines would say. This person mysteriously disappeared. Or the guy from Africa that made a self-powered television, apparently he disappeared somewhere. But who knows, man? These are just headlines. We don't know if they're true or not, but you have a self-powered damn television. You know where you can go from that? People start using that same technology in other areas. And slowly and over time, a lot of the old technologies will go the way of the dinosaurs, which ironically, that's supposedly that's where the oil comes from. Dinosaurs. But anyway, a lot of people, a lot of rich oligarchs will definitely won't be oligarchs anymore, and they wouldn't have it, especially if they're lobbying, they're paying people to lobby and the government and this and that is like, dude, you're messing with the livelihood. But going back to the point now, look at Tesla now. Now that even though these other automakers aren't making a profit from their electric vehicles, it's just the fact that now people have more options for the people that choose to purchase electric vehicles. They have more options now. And the Tesla sales are showing that. He's no longer the beloved Tesla, our savior of humanity anymore. He's one of them now in the eyes of the masses. He's not going to take us to Mars. Like, when was the last time we ever seen a headline that Elon Musk was going to be the person to take us to Mars? We don't see that shit anymore. That's how you know that he's no longer the darling that he used to be. Or there's nothing changed with Elon Musk. Is that the public perception, how the media has portrayed him, is now changed. You don't see no headlines that he's taking us to Mars. They're talking about his life. They're talking about how he treats his whatever child that's a part of the community. They talk about the many children that he has, like that's anybody else's business but his own. They try to hit him with he slept with his employees. Like, come on, dude. Like that's life. That's what happens. If there were consenting adults, I mean, that's nobody's business. As long as everybody consented to the act, that's nobody's business. They were trying to hit him with everything. They're trying to say that he was part of that Epstein fiasco, like he was there too, I think, if I'm not mistaken. I mean, they were trying to hit him with all kind of shit. But you don't see he's taking us to Mars no more. You don't see that shit no more. I'm not gonna lie. I'm not gonna lie. This short is killing me right now. And this is the bad side about trying to document all your trades. I did see this setup. I did want to take it. What I didn't want to risk was being inconsistent. Yeah, I'm gonna miss this trade, and it absolutely sucks seeing it work out and play out. Like, it absolutely sucks. However, I have to be consistent because I didn't document this trade. I didn't plan it out. There was really no reason for it. It worked this time, yeah. But there was no reason for it. Or not a reason for it, but I didn't document it. Yeah, I mean, if I had more time to really analyze this trade, the reason why I saw that this was a great short opportunity was because it just seems like the bulls were having a hard time taking this high out. But at the time, the market was still kind of pumping. Let me go back to the 4 hour. Let me go back to the 4 hour. Yeah, so we took out this high right here, and this is the high I was looking at, that 850 high. We took that out and we swept it. And that's when I was thinking to myself, So we swept that high, and from this high, we got this big down move. We came back into it, we tapped it, and then we swept it again. And then we got an initial wick down. Yeah. But yeah, that's the dark side of doing this, I guess. So not the dark side, but I mean, sometimes I guess if an opportunity presents itself, you're just not going to have enough time to really analyze it and have enough time to document it and take the actual trade. So let's see if I took this trade. I mean, I'll give myself 56. So 56, I just would have barely gotten my 10 points hit right here if I took this short. I just would have got the 10 points hit. Oh yeah, did anybody take this trade yesterday? Yeah, I was dead on, yo. I saw that, I was like, yo, I should have had a limit here on NQ. Yeah, I was looking for an entry around this 35 level yesterday on the NQ. And you can see that we got the rise up, and then we got that big drop. I am kind of not upset, but I kind of do. I was planning on looking at the charts after we got the PPI, but I think at the time I was doing something, preparing for the stream, I think. So when I came back to the charts, price was already making this move back up. But oh, this is the ES. Man, it keeps changing from the ES to the NQ. Yeah, I was planning on getting on the ES. I was planning on getting at 22, and the reason why I was planning on setting a limit at 22 is because I didn't think it was going to take this low out, but I thought that they was going to at least test the bottom of this range, and you can see that prior resistance turned to support. And so I thought that they was actually going to come in, tap this level, and then go up. But obviously, what happened is I'm pretty sure a lot of people had the same idea. They got in short, they got stop ran because I think price got all the way down to 16 in this area of support right here. But I would have still been safe because my stop would have been at 212. So I would have took about 5 or 6 points in drawdown in this trade, and I would have got all my targets hit on this one. So the day has definitely been a learning experience today. It seems like today is missed opportunities today. I guess that's the lesson that I'm supposed to learn. The missed opportunities that I didn't take because I was doubtful of them. So yeah, the lesson of the day is missed opportunities. But I gotta go to this meeting. Give me a second. I'll be back. I gotta go to this meeting.
Connection lost.
Yeah. Okay. Yeah, look at that short working out. Look at that short working out. Oh my God, dude. Ah, man, that hurts. Look at that short working out. Ah, man, that hurts. Oh, that hurts. Ah, that hurts. But yeah, I forget that water power guy with the car. Yeah. Apparently, there's been a bunch of people coming out making water power cars, and apparently they've been disappearing. Or they've been reported to have disappeared. I'm pretty sure someone just visited them and just said, hey, relax. Relax. Because it's easier to pay people off. I mean, if you don't want to bring attention to a situation, you don't kill people. You pay them to be quiet because you make somebody a martyr, and then all of a sudden now you have attention on something that you don't want attention on, and somebody else is going to come out. And then once everybody start making these water-powered cars, then you can't kill everybody. And then the situation will be out of your control. So it's just best to pay these people off, have them sign like an NDA or something and tell them to chill the fuck out. It says Bone ain't the only one hit, man. You know, that situation is kind of that's crazy. That is absolutely craziness, man. That situation with Boeing. That's crazy. You got two people come out as whistleblowers. And honestly, so when I watch these documentaries and they call these people whistleblowers, you want people to come out and talk about the nefarious actions that these big corporations are doing. Why would you call them something that sounds so derogatory? It's like calling, I mean, it's just worse as calling somebody a snitch. It's like, yeah, these whistleblowers. How do you, unless they don't want to encourage nobody to be quote unquote whistleblowers, like, why would you call them that? I wouldn't want to be called no damn whistleblower. But honestly, I'm not the best at this stuff. Yeah, but all right. You said they destroyed the car too? Yeah. Mm. Yeah. Yeah. Yep. People have lifestyles that they don't want to give up. And unfortunately, a lot of people had to lose their lives just for it to come out anyway, which, yeah. But all right, guys, I'm going to end the stream here. I'm just going to document in my journal. And I mean, we did take some trades. We made some money. We gave it all back. Gave it all back gambling. But I mean, that's what that account is for. And that's actually a big reason why I stopped scalping and just turned into a longer form trader. Because how often does that happen? You get on this win streak, all your setups are good, you're scalping, all your scalps are great. And in my situation, you start making shit up in your head, and that's exactly what I did. I was like, man, it's gonna probably short here. You just want that next trade, and you'll convince yourself however you need to convince yourself to get into that next trade. And that's what I did. Even though I looked at it and I had to tweak my eyes and say, that's not a good area to short, but I took that shit anyway. I took it anyway. Overall recap, I mean, I did not. So there was a lot of missed opportunities today. I will say that there was a lot of missed opportunities. There were missed opportunities. And it seems that no, I'll just keep it like that. It was just a missed opportunity. That's all it was. Missed opportunities. But did I do great today? So today, even though it hurt, and boy, does it hurt. When This is one. Okay. So today was definitely it was hit or miss. It was hit or miss. We knew that Jerome Powell was going to move the market as he always does. He pumps his market as he always does. We got a pump both on. We got two pumps on the NQ, and we got our pump on the ES. We got our pump right here. We got our pump right here. So I guess we got our pumps. My thesis now is that we rotate lower. It may take all day, but I wouldn't be surprised if we get a retest of this low sometime, if not tomorrow, later on today. I don't see the market rotating higher. Not right now, at least. We're going to need the inflation data to come out. I mean, even though if these investors have because I mean, these reports are written in advance. We've already spoken about how these reports are sent to media outlets, so they have time to write up these articles when the actual data gets dropped. So the information is already out there. However, it's not official. It's not official. It's not official until it gets released. So a lot of this movement could be because of that. We will never know. We don't care. We're just going to trade the charts. But until we get the official release of this data, I don't believe that the market's going to trade higher. I mean, it doesn't even make sense. You can't even explain to your investors that, yeah, we had the document. We knew what the CPI was going to say. That's why we pushed this market up higher. You can't do that in reality. So I do believe that we're going to get a trade lower, price to trade lower. We could see them coming here at 33 on the ES. We could see it. I mean, honestly, in my opinion, I feel that it will be better for you guys to kind of sit on your hands and just watch the charts for the rest of the day. We're already at that point of where the moves are not reliable, that the markets become very illiquid at this time. They don't move. So if I would come back around like 1:30 Central Time going into Power Hour, you can probably catch a move then. But until then, the market usually slows down, and it's not even worth the trade. It's not worth the stress, honestly, in my opinion. And that's the ES. Obviously, on the Nasdaq, it does look like you could see a retest of this level, and you can already see that it kind of almost did retest this level already. We would need to see a strong close below VWAP, and we would need to see a strong close underneath this low before we start really seeing anything. But all right, guys, I mean, that's all I have for right now. We'll come back again tomorrow. We got CPI in the morning, trade safe overnight, and we'll do this again. Peace out.